Hello and thank you for joining today's webinar, Self-Employed, a Focus on Real Life. My name's Louise Apollonio and I'm one of the National Account Managers here at the Mortgage Lender. So let's have a little look at the agenda and what we're going to be covering today. So we're going to look at why is the self-employed market so important. We're going to take a little look at the self-employed customer sentiment currently. So, what is the current sentiment for self-employed customers following the pandemic, and as we're kind of coming out of the pandemic and we're seeing some recovery. We're going to look at self-employed lending and underwriting currently and how we think that might change moving forward. And also what I'll do is I'll finish with covering off some packaging top tips to help you get those cases to offer as quickly as possible. The self-employed demographic is now a massive factor in the UK economy and also the housing market, amounting for around 5 million Brits. It's always been a huge part of our proposition. We wanted to understand how self-employed people have been affected, particularly coming out of the pandemic. Interestingly, self-employed account for about 15% of the market, but for us, around 50% of the business that we write for residential mortgages is for self-employed clients. So it just shows the support that we want to offer this segment of the market. So to help us to see what the current customer segment was coming out of the pandemic, we commissioned our own research back in March of this year to understand the UK self-employed, and what we did was we surveyed 1,000 self-employed customers. There's been a lot of coverage actually in the market if you look over the last few months around self-employed. This year myself, I've taken part in a huge number of self-employed criteria clinics, and also many webinars that have been focused on this particular topic. So there is a real focus on how we can help self-employed moving forward. Also, some of you may have seen a BBC News report back in July, and that was all around mortgages being refused for self-employed people who took any kind of COVID grants or any kind of COVID support. But I'll go into that a little bit later on in the slides. So what I'd like to do now is just take you through some of the key findings in our research. So even though the self-employed customers have continued to work hard, over a quarter have seen their incomes drop by 50%. And this is all through no fault of their own and due to the effects of the pandemic. There is a flip side though, as there have been businesses that have thrived, with 8% of the panel saying that they hadn't experienced any change to their income, and actually 14% said that they'd seen their income increase. So what we've started to see really is what we're calling the survivors and thrivers within the self-employed market. Over a third of self-employed people feel that it's actually become harder to get a mortgage than pre-pandemic, with 55% thinking that they won't be able to borrow what they currently owe on their mortgage. Those living in the southeast were the least hopeful about their chances of securing a mortgage, with 60% believing it's now more difficult than ever for self-employed people. A belief that was echoed actually by 55% of self-employed people up in the northwest, 52% in Wales and the West Midlands, and 51% in Scotland and East Anglia. This is the stat that actually shocked me the most. Over 40% of self-employed people having considered going back into employment due to the pressures of the pandemic. That's a real blow for the economy, and also a real blow for all those self-employed clients that have worked really hard to build up their business over the years. Could this mean that we're going to see more self-employed looking for additional income through employed roles to top up their income? We're certainly seeing more of these scenarios being presented to us at TML. Self-employment is so important to the economy and also to the recovery of the pandemic. We need to be talking to these types of customers to make sure that they know that there's options available, and also to advise why it's so important to use advisors like yourselves, because you can search the market to make sure that you're getting the best possible criteria along with rates as well, and hopefully help while they're building their businesses back up. So nearly 60% of self-employed people feel that they've actually had less government support than those in an employed full-time position. Again, I suppose this is another example of the self-employed community feeling that they're being treated differently to those that are employed. So a huge 47% have actually been deterred from even applying for a mortgage. I mean, this is such a large percentage of those that we surveyed, and with an estimated 5 million self-employed people across the UK, we need to make sure that we're serving this part of the market as both lenders and also advisors. So again, it just highlights the need for advisors to be speaking to customers to discuss the options for them, and also another great touch point with your clients to be able to help them whether they're looking to remortgage or purchase their next property. And finally, we turn to self-employed finances. So a third of self-employed homeowners have increased their unsecured debts, and a quarter have deferred mortgage payments to prop up their finances during the COVID-19 pandemic. With unsecured debts, including loans, credit cards and overdrafts, having risen by an average of around £2,312 over the last year. There's millions of self-employed people contributing to the economy and the economic recovery. So it's vitally important that this is thriving, and it's a competitive specialist market sector that's able to provide criteria and products that really meet the needs of this segment of the market, and also to prevent them from being locked out of the housing market or trapped in a home that no longer fits their needs. So that leads me on to government support during the pandemic. If we think back to 18 months ago, nobody had heard of things like furlough, bounce back loans, CBILS. Us as lenders had to change the way that we underwrote cases and also understand the impact and risk. And also you as advisors had to understand and do the same really to understand how this might affect a lender's viewpoint and how you needed to support your customers. Again, just going back to that BBC News report that I saw in July of this year, almost 60% of self-employed borrowers felt that they were penalised by lenders, and 70% said that during the mortgage process some lenders would not consider them because they were self-employed. The report also confirmed that some of the biggest high street lenders had been refusing mortgage applications from people who just took that kind of government support. Within our research, 47% have actually utilised government support. As I said before, personal credit has increased by an average of £2,312, and 24% have actually missed mortgage payments or payments on loans or credit cards. So it's a large proportion actually, if you think about it, of self-employed applicants that might be struggling to get a mortgage with some of the more larger lenders who might not accept this kind of government support. So again, this is where specialist lenders are really going to be able to help your customers moving forward. So what does this all mean for self-employed lending in 2021 and beyond? ONS is now predicting that the recovery will be stronger and faster than expected. The housing market saw its strongest spring season in a decade, and self-employed are likely to be a key part of the recovery, just as they were after the financial crisis in 2008. It means a lot of pent-up demand for mortgages, but buyers, particularly the self-employed, will need help from advisors with access to the right products. So I just want to move on to how we can help at TML, and I guess what our proposition is to help self-employed customers. So we actually, a couple of months ago, changed our self-employed proposition in that we have now kind of split out what we can do to help. So we've got self-employed criteria for those that have been impacted by COVID, but also we've got our standard self-employed criteria as well for those businesses that haven't been impacted or actually might have thrived over the pandemic as well. So firstly, I'm going to touch on the COVID impacted businesses first of all. So we're taking a little bit of a different view here at TML, and we understand that people will have been affected over the last 12 to 18 months, and now we've passed that October kind of deadline in terms of people now having to use the most recent year's business accounts. We're going to start seeing more of those business accounts coming in that have been impacted by COVID. So what we say here now is that we're going to consider those that have been impacted by COVID by using their latest year's accounts in conjunction with their previous year's accounts and also their latest 3 months business bank statements. And what we're going to be doing is we're going to be looking to say what is happening within that business. So we can see that there's been an impact in their most recent year's accounts, but are they making a recovery? So is that business currently recovering? And we'll be able to see that clearly from their 3 months business bank statements. So what we'll be doing is we'll be looking at what is their current trading income, what is coming through that business at the moment, and where are they in terms of that recovery. So it's going to be important that the applicant has been trading for 2 years, because we are also going to need to work in conjunction with that previous year's accounts as well. So what we'll be needing is those latest 2 years accounts plus their 3 months business bank statements. I'll go into the affordability in a little bit more detail in a couple of slides' time, but this is available for our Real Life 1 to Real Life 5 products. So those of you that are familiar with TML, we have 8 products across our residential proposition. This will be available for the COVID impacted self-employed up to Real Life 5. So the good news is we're still allowing a certain level of adverse as well applicable to these types of customers. So if we're going to be looking at the most recent and the previous year's accounts, how or what income are we actually going to take? So essentially, there might be different scenarios when you're looking at the 3 months or latest 3 months business bank statements along with the most recent and previous year's accounts. There may be a situation where by looking at the latest 3 months business bank statements and looking at that current trading turnover, they may be back up to their previous levels. So example 1 shows what the 2019 to 2020 figures were and what they're currently trading at. So you can see the current quarter turnover at 50,000, which if you took that on an annual basis would show an income of, or a turnover, sorry, of 200,000. So in those examples where they are or they have made that full recovery, we will work off the 2019 business bank trading accounts and we will use that figure. There might be examples where a customer is on the road to recovery, so to speak, but hasn't quite made the full recovery back to 2019 figures. So example 2 just gives you a little bit of an overview of what that might look like. So say, for example, we've got the previous year's accounts are still showing, excuse me, at 200,000. And the current quarter turnover from the business bank statements is at 30,000. If we're looking at that 30,000 over an annual basis, that would give us an income, or a turnover, should I say, of 120,000. So that's what we would use. So you can clearly see in example 2, they've made a recovery, but they're not quite back up to 2019 figures. But what we'll do is we'll work on that recovery income. Now, it's important just to point out that we wouldn't allow customers that have exceeded 2019's figures. So if a business has actually made a really great recovery and they're having a fantastic sort of year currently, and we can see that from their latest 3 months business bank statements, we would cap the income at what we can see in the 2019 business bank statements. And what I would say is just get in touch with your local BDM before submitting an application, and what they'll do is they will talk you through all of this and they will be able to show you exactly what income that we're going to take. And obviously what we're going to be doing is we're going to be using the same calculations that we can see in the 2019 accounts for things like cost ratio, profit before tax. So again, please, if you have a customer where you know you need to use this COVID impacted criteria, please just pick up with your local BDM, or you can contact our sales hub up in Glasgow and we'll be happy to help. But the main message here really is, any customers that have been impacted by COVID, we can help them by working on their previous year's accounts along with their latest 3 months business bank statements. So moving on to those businesses that have actually thrived over the last sort of 12 to 18 months, and this is moving back towards our standard self-employed criteria. So here at TML, we're always looking at income based on the latest year's figures with no averaging. So any customer that hasn't been impacted, we're always going to base this on the latest year's figures. Now, we have had lots of cases in the past where there has been a significant increase from the previous year to the latest year, but like I say, we're always going to work off the latest year's accounts. It might be that we want some kind of explanation. We'll probably want to understand what's happened within that business, and we always welcome those explanations when you're submitting a case to us. Add a note, add some colour to the case, let us know what's happened within that business. But again, as long as it's sustainable, we're going to work off that latest year's figures. And we can accept, and consider large increases in profit as well. Like I said, as long as we've got those explanations and we can make sense of it all when we're looking at the accounts. I think one of the most important things of our proposition for self-employed is the way that we take, or the figure that we take, for the affordability. So we are always going to take, for limited companies, the profit before tax plus any salary that they have taken from the business. So that in itself can give an uplift on the income figure as well to those lenders that are using the net profit rather than before profit tax. We can help newly self-employed customers as well. So if you've got self-employed customers that have only been trading for 12 months, that's absolutely fine. We can help them, and that's right up to our 85% LTV across the residential range as well. And we're not discounting any particular industries. So again, if the case makes sense and the case fits on the criteria, that's all okay from our point of view. Where we've also been able to help lots of self-employed customers is those more non-traditional self-employed types. So there's been lots of customers that have come to us that maybe have like an internet-based account, influencers, sports people, all different industries like that. And again, they're areas that we can most certainly help with as well. So just looking at affordability now and how we assess the self-employed income. So I mentioned in the previous slide about taking the profit before tax, but what does that actually mean? So this example here just shows business figures. So you've got 2019 figures and you've got 2020 figures. Obviously, it's important to note here that we've just done this example based on a income multiple of 4.5 times. But obviously, it's there is an affordability calculation that will happen. But just basing it on 4.5 times income calculation, looking at those 2 years figures in terms of what we do. So like I said, we're going to always base our figures on the latest year's profit before tax. So if we're looking at 2020 figures, because we're not going to be taking 2019, there has been an increase in the turnover from 90,000 to 100. So we're going to be basing our lending on those 2020 figures. So what we'll be taking is the 70,000 profit before tax, plus the 10,000 salary that director's taken, which has taken us to 80,000 in total, which gives a maximum loan based on the 4.5 times income at 360,000. So that's how we would calculate it using these figures. So looking at lenders that take the latest year's profit after tax as an income, so you can see there that would be taking the 56,000 post-tax profit income plus the 10,000. So that's only given an actual affordability figure of 66,000. So times that by the 4.5, that only gives a 297 maximum loan. So again, quite a large shortfall on what that figure would be, taking it before the tax. And then also you've got another scenario there with lenders taking the latest year's salary plus dividend income. And you can see that there as the salary at 10,000 plus the 50,000 dividend, given a total of 60, putting that through the 4.5 times calculation, giving them a maximum loan of 270,000. So again, these are all things that are really, really important when you're assessing self-employed cases, and you're looking to maximise that affordability for any one customer. By taking that profit before the tax, you're really being able to maximise that maximum loan for your self-employed customers. So just before I go on to the packaging top tips for you, I just wanted to cover off just some additional kind of criteria that we apply to self-employed customers, and again, hopefully areas that might be able to help as well. So as you can see, we are taking the profit before tax, and in those scenarios, of course, we're going to need the most recent year's accounts to be able to do that. However, we can work off SA 302s with the corresponding tax overview for applications. So if the income fits on the figure on the SA 302, we can absolutely work on those. We don't insist on you submitting the full accounts to us. The choice is yours. Obviously, if we are looking at the profit before tax, we are going to need the accounts, but we can work off the SA 302. We can expect customers with impaired credit self-employed as well. So for those of you that have used us before, you'll know that we do have an adverse range. We've got 8 products in total. As I mentioned earlier, for any COVID impacted self-employed, we're going to go from Real Life 1 up to Real Life 5, but for all of the self-employed customers, they can choose any product from Real Life 1 across to Real Life 8. So there is an element of credit impairment there as well for any self-employed customers. We are seeing applications coming in where there is multiple income streams, self-employed customers that might have actually had 2 self-employed businesses, or they may have additional income streams through employed roles as well. So we can look to take 100% of all of that income as long as it fits the criteria and we can see that evidenced. And like I mentioned before, we can accept your more non-traditional self-employment types, so sports professionals, vloggers, and all these kind of cases are going to be considered on a case-by-case basis. And like I mentioned before, get familiar with who your BDM is here at TML. We do have all their details on the website. If there's any case where you just want to run it through, we can talk the case through with you up front. Any additional information that we feel might need an underwriter's view, we can go into our underwriters at inquiry stage, give them scenarios, ask for their opinions as well, and be able to give you a good indication of whether it's a case that we're going to be able to help with or not. We want to help to make sure the process is as seamless as possible. So please get in touch with any kind of cases that you would like to discuss with us. So just looking at our lending lowdown now, so what we want to be able to do is help to get the case through as quickly as possible and get that case to offer as quickly as possible. So there's a couple of things here that I think are really, really important just to point out. So the portal is all online. So you'll submit your DIP and then further on to that, the application on our portal. Once the DIP has accepted, you can start to create the application, and we will give a checklist of items of what we require. So on the portal, you'll see that checklist of items. Please only give us what we ask for. So if the checklist doesn't say that we need ID, that means that we've been able to verify that electronically, so we don't need any ID documents. So just give us what we ask for. We know that you'll have lots of additional documents because you have to get that from a compliance perspective, but from looking at our checklist, just submit what's on there. Any additional documents that you submit to us, we do need to underwrite, and it can just slow the case down for you in terms of our underwriters coming back. Another thing that we ask as well, and again this is all to speed up the process, is to upload all the documents together. So when you're submitting the application, whatever those documents are on that checklist, if you can upload them all together and submit them all together, it just means that our underwriters can take a view of the case in its entirety and make a full assessment of the case. And again, that in itself is going to help to get that case moving along quicker to the offer stage as well. I mentioned in the presentation as well, give us a reason, whether it's around the self-employed particular area in terms of what's happened around COVID, or anything else that you think might be good for our underwriters to understand. Then just give us a reason, leave a note on the portal, and we'll be able to pick that up in conjunction with the case. And like I said before, give us a call. You can contact our BDMs, you can contact our sales hub, but also you can actually speak to our underwriters. So once that case has come in as an application, it'll get assigned to an underwriter who will then take that case all the way through. So if you've got any queries or you just need to pick up with the underwriter about anything, you can call into our head office in Glasgow and you'll be put through to that particular underwriter who's looking after your case. Okay, so finally, how will you get registered with us? So you can go onto our website and you can register now, and we will then do the rest from our point of view. So you'll fill in a bit of information that will come over to us and we'll get you set up and registered on the system. You're then able to submit the DIP on our portal and you'll get either an immediate decision, or if the case refers or declines, an underwriter will pick that up and come back to you within 24 hours. We actually overturn around 70% of our referred and declined DIPs, so we'll get in contact with you within that first 24 hours. You'll then be able to look at the checklist that I mentioned before and see what items you require, and then also submit that online application along with uploading all those documents on the checklist. Once that's come over to us, you can track the case on the portal, or like I said before, you can give us a call in the sales hub and be put through to the underwriter if you want any kind of update on your case. So all that's left for me to say is thank you for joining us today on the Self-Employed webinar. I really hope that you've taken some information from today's webinar, and like I said before, please get in touch with us here at TML for any self-employed cases.